Bitcoin is easy. Crypto is insanely difficult. And without insider information, I believe that most people are just going to fail.
What's up, everybody? It's LG Doucette here, and welcome back to the Milk Road Degen podcast, the crypto pod where I try and borrow conviction from people that I'm meeting just for the first time. Today's guest is Pio from the nifty, now known as BoDoggos Entertainment. These guys absolutely dominated on the media landscape in the last couple of years. They built an absolutely rabid community on Solana and now beyond, all on the back of their daily Twitter spaces and a solid stable of creators. And this guy is the co-founder of that company. Today, we're going to hear about BoDoggos Entertainment, what their journey's been like, what their plans are, but more importantly, I want to know from Pio what he is trading these days. He claims that he is no longer in the trenches, and I want to know why not. And he's going to tell us about other things that he's interested in, like Bitcoin mining stocks and strange real estate tech companies. We're going to learn a little bit more about his background. Before we get started, I wanted to point you guys to Milk Road Degen Pro. That's where I spend most of my time, is in the Discord channel, and also putting out trench signals there. Not the crazy Memecoin stuff, but more like actual decent quality stuff, at least some of the time, as well as a Milk Road Degen Pro report that comes out on Fridays today. So if you want to check out that channel, that's where we put a lot of our efforts and try and bring you guys the best alpha. You can sign up today. The link will be below. And today's episode is brought to you by Fun Token, powering the next wave of Web3 gaming and decentralized entertainment. Enough from me. Pio, what's up, man?
Not much. I hope the audience hasn't already turned off the podcast when you brought up Bitcoin mining stocks and a real estate tech company. I'm assuming your audience was like, fuck this guy, I'm out.
No, they want to hear about something different, man. Like this, I always talk about, I talk about everything from like, base vaporware plays to weird meme coins with deep conspiracy theories. I think it'll be refreshing to hear about something totally different, man. I want to ask you, Pio. Okay, I think this is the most important thing, because I think a lot of people, when they have, either they have 5 minutes a day to spend on crypto or 5 hours a day, when you wake up and you're like, okay, it's crypto time, what's the first thing you open? What do you start looking at in the first couple minutes?
Well, I think that ultimately Twitter is going to be the most, it's the best source of information. It just is. It's the best source of information, quite frankly, for the stock market, in my opinion, in terms of public information, like non-insider information. And don't get me wrong, my belief is that in crypto, insider information is the number one source of, people outperforming the market. Just being in the industry now for almost 5 years professionally, that's just what I've seen. It's rampant, right? And so Twitter, I think, is the best public source of information. So I'm checking Twitter, and I'm checking, the apps that I have on my phone, like Robinhood and Gemini, to see what the price action looks like for the day.
How are you curating your X feed? Because that's the main thing for me, is that I've been working really hard the last couple months, make this thing like tidy, because there's a lot of crap, especially with InfoFi. It's getting worse. How do you do that?
I mean, I just follow like analysts, right? Like real analysts, not fake analysts. So I just follow like real analysts, guys like Mike Alfred, now, this guy, Eric Jackson, who's part of the Open Door Army. That's the real estate company that you were, referencing in your intro for me. Those are like two guys. But I mean, once you find sort of like North Star analysts that you're interested in, and you start picking up on like the assets that they discuss, then you can find other analysts that are specific to those assets, and you can start to kind of gather who you want to follow, who you want to treat as a counter signal. For example, I use Martin Shkreli as a counter signal for a lot of stuff that I do. So if he's like bearish on something, I'm like, all right, well, this is probably something I'm going to want to look into more and pay more attention to.
Like Shkreli, like the pharma guy?
Yeah, that guy, yeah.
I like that, actually, because I think that's what ends up happening, is people are like, this person is an evil person of some kind, so they cannot possibly have good takes on anything.
It's not actually about his character.
That's what I mean. Yeah.
No, but I don't have any opinion about his character. The reason I treat him as a counter signal is actually just because of his takes. Like, I just fundamentally disagree with his takes. He's like a MicroStrategy bear. He's basically a Bitcoin bear. Like, so being a Bitcoin bear is just insane. That is an insane thing to do. That means you've watched it go from $1 to $115,000 in 15 years. You've watched it never get hacked, despite all the incentive of the world for it to be hacked. And you've watched nation states adopt it, and you've watched an ETF by BlackRock come into market and be their most successful ETF launch of all time. And you're watching normal companies, not Bitcoin treasury companies, normal companies like Figma and Tesla, and the names just continue to grow, put it on their balance sheet and succeed from it. Now GameStop. And to be a bear after all that, I just can't trust your opinion on other stuff. So I now saw that he was calling for people to short Opendoor. So I was like, all right, that's a wonderful signal for me. And yeah, he's a MicroStrategy bear too. So I like to see him not interested in things that I'm invested in.
He's like your Jim Cramer, basically. That it's just like, you're like, oh, he whatever take he gave, you're going the opposite.
Well, one of them.
Yeah,
he's one counter signal. I mean, it's actually, once you sort of start getting into the weeds of following these analysts, it's very easy to find signal and counter signal, because even people that you trust and that you really like and that you agree with, you can use as signals and counter signals, because when someone's fully invested in an asset and their public persona is based around discussing that asset, guys that get really, really deep, when they're being attacked because the asset's going down, their whole, kind of vibe changes in the way that they communicate, publicly. And that can be a signal of a bottom, basically, because they're more defensive. And then when things are going incredibly well, you can see them flip to be a little bit cocky. That can be the signal for a top. So if you really do want to trade, which by the way, I don't really trade much, but if you do want to trade, you can kind of use that. I use it more to just be able to know when a good time to, continue to accumulate is.
So what would happen if Martin Shkreli suddenly turned bullish on Bitcoin? What would that mean for you?
I have a lot of questions. It obviously wouldn't impact my Bitcoin position, but I wouldn't be able to look at him the same way. I'd be like, oh, he's actually waking up. This is, he's not going to be the same counter signal that he once was. I don't think he'll do that though.
When are you wrong? Here's this, like, in terms of like that analysis, because I think that's something that's like important, is not just you finding the right sources and signals, which I think is great, especially this kind of strategy you've outlined. I think the other important part is understanding like how yourself as an active trader or passive trader or whatever you are, what your own personal tells are, like where you get sucked into things that maybe aren't as good trades and where your better trades are.
Sure. Well, I mean, I'm wrong in the sense that any investor is wrong where no one knows where the bottom is. And so, I'm dollar cost averaging, accumulating assets, and then they're going down after I buy them. You're technically wrong. You should have waited, however many days to buy it for a better price. But the world doesn't work that way. You don't know when the bottom is going to be. But I'm wrong about that every single day. Right? Like I think I probably bought a couple of shares of Opendoor yesterday. It's down 6% today. So I was wrong yesterday to buy them. I should have waited until today to buy them. Right? So that happens all the time. I used to be wrong in crypto all the time because I didn't understand crypto, not Bitcoin, right? So I didn't understand the way that crypto sort of worked from like a musical chairs asset perspective. And I had deeper conviction and belief in individual crypto assets than what was warranted. And that was really the first, like, call it 3 years for me, right? Is that kind of making mistakes like that in crypto. Because ultimately, outside, crypto, it's just incredibly difficult. Bitcoin is easy. Crypto is insanely difficult. And without insider information, I believe that most people are just going to fail trying to, trade or invest in crypto when you put it against Bitcoin, right? Like, sure, you could buy Ethereum and it'll go up, of course. But over a long period of time, it would have just been a better call to buy Bitcoin.
Why? So tell me more about that musical chairs aspect, because you're clearly like a veteran of the trenches. You've returned from that, and now you're making it like larger bets. Tell me about that musical chairs.
Yeah, so I mean, like the most on the nose musical chairs area would be the assets that are furthest down the risk curve, meme coins, obviously NFTs, things like that. At the end of the day, like for a meme coin, for example, there isn't any actual true value the same way that there is if you buy a stock of a company that has, positive cash flow and is, has assets and has actual true value, right? And obviously meme coin trenchers, they really don't like to hear the phrase meme coins have no value, right? They'll call you like a boomer. They'll say you don't understand. But really at the end of the day, there is no true value. The price can go up though. The price absolutely can go up. I'm not saying that the price of something can't go up. But because there isn't true value, you're buying something really in the hopes that it's going to just get more attention or be part of a narrative or catch a wave, and then it'll go up in price, and then you have to sell it. You have to sell it, right? Because if you don't sell it, time isn't on your side with this, because it's more like a hit song. Just like how someone can have a number one hit song and it's an amazing song, right? But that song doesn't stay number one for 9 years, because it passes, right? It was a massive success. It was a huge success, and they made money on it. But if you imagine it like a token, if you bought that song by some artist that's a new artist, and you bought it when it was number 60 on the charts, and then it catches fire the next week and it goes to number one, you would make a lot of money, right? But then you don't want to keep holding that number one song for the next 6 years. You want to sell it when it's number one, because 6 years from now, it just won't be number one anymore. It's not how it works.
Mm-hmm. Mm-hmm. I feel like a lot of people, and I still see this in the few communities that I'm in, people convince themselves that like their risk asset has some kind of incredible future.
Yeah.
And we did that with NFTs a couple years ago.
Yeah.
And it turned out to not be true.
So the NFT stuff, my opinion on the NFT stuff, having lived through it, being an NFT founder, is that when they first came out, people thought that they were literally Picasso and Van Gogh on the art side. Like the artists and the artworks were literally Picasso and Van Gogh. Yes. And then on the collectible side, it was literally, Pokemon and insert major Hello Kitty. They thought it was Pokemon and Hello Kitty, right? The reality is it wasn't. They were just crypto tokens. That doesn't mean that they can't eventually become Pokemon and Hello Kitty, but Pokemon's been around for like 30 years. Hello Kitty, I don't know how long it's been around, but I think it's been around for quite a while. Probably similar length of time or more. And then Van Gogh and Picasso have been around for 100 plus years, right? And you can go back 1,000 years, and there's Raphael and all these different guys that are iconic artists that have had time for the market to appreciate their work and anoint them as the people that are worth collecting, right? The NFT stuff, people were like, no, it's Picasso right now. It's Pokemon right now. And then the prices soared so high, and there were actually non-crypto people contributing to those prices, which is rare because there's not very many non-crypto people contributing to the price of a given meme coin, because the barrier for entry for a given meme coin is so hard, and meme coins are so like hard for the average person to grasp because you don't really get anything. NFTs having the picture and the artwork made people feel like they were collecting art, which is like a relatable, graspable thing for a human to understand. It just happened to be digital, and they felt like they were kind of like ahead of it and everything like that. And by the way, they were right that it's a thing, but that doesn't mean that an individual NFT at that time in 2021 should have cost $500,000 when there were 10,000 of them in a collection, right? A Charizard card doesn't cost that much in Pokemon, and a Charizard card has way more deep value at this point from a collectibles perspective than any individual NFT does. Again, that's not to say that the NFTs over time won't, acquire that and earn that. But people were trying to force it all at once, and it turns out at that time it was really just a crypto token.
Web3 gaming is booming, and one token is powering the next wave, Fun. With 100K holders worldwide, Fun is already fueling engagement across AI tools, rewards, and 40 plus upcoming games in 2025, audited by CertiK with an AA Skynet score and listed on Binance, HDX, and Poloniex. Fun is built on trust and adoption. Now, with the launch of Fun 100X Foundation, $10 million is going back to the community, funding DAOs, dApps, and a governance for the future of decentralized gaming. So discover how Fun is shaping Web3 at milkroad.com/fun. Yeah, I think that's a really good summary. And I think, a lot of people in our kind of cohort love to fantasize it and have this nostalgia about that time, even though what you're saying is so true, which is a funny thing. And even I totally agree with you, and even a lot of those artists you mentioned, it's like, most of their youth and prominent and adulthood, they weren't known for anything. Picasso wasn't a big deal until he was much older. And even Pokemon, dude, I was 12 when Pokemon came out in North America, and I went straight to fucking Walmart or whatever it was, and I had to choose red or blue. And then I just played that shit for a couple years, but I never thought that this would be worth anything. It wasn't. I had so many cards, but I just played with them. They had actual play value to me, but they were never valuable as a collectible. It took decades for it to be at this peak euphoria that it is now, right? So you said that you don't really trade, or you're not really into like more risk assets these days. What would it take for you to be into risk assets? Like what kind of meta would need to come along for you to be like, fuck it, I gotta put Bitcoin mining stocks on the back burner for a second. I gotta be in here every night like I used to be.
Well, if you talk to a hedge fund manager, they tell you that Bitcoin mining stocks, and Open Door are all risk assets. I do consider Open Door, as risky of an asset as, any given altcoin in crypto, because there's so much that needs to happen for the thesis to fully manifest. And a lot has happened in the past week that makes it more solid, and you're seeing that reflected in the price. But like for crypto stuff, I would need essentially access to information, like access to insider information to put try to build a big position in a given meme coin or something like that. Because it's just so hard. Like even if you look at an asset like SWI that had a really epic run at this point, probably about a year ago, I think was maybe the major repricing of SWI, or maybe a little bit less than that, 6 to 9 months ago. Nobody knew that was coming. Nobody knew that was coming. No one on crypto Twitter, none of the big influencers, none of the big accounts were major SWI bulls before that. Somehow the market just saw real value and said that SWI has to be a top 10 coin, which I'm not saying that there's no value in these big blockchains like SWI and AVAX and Solana, right? But what I'm saying is trying to figure out the best time to buy them and trying to hold a massive position and outperform Bitcoin over a given time frame is very, very challenging. And a lot of like the vast majority of like CT, like crypto Twitter people and people that are like, quote, in crypto think that that's actually the strongest approach. And then they actually don't hold sizable positions of Bitcoin for a long time. And so all these people that have, quote, been in crypto for X number of years, longer than me, in crypto since 2016, in crypto since 2017, 2018, end up never getting rich. And it's because they're approaching it like a gamble versus approaching it like an investment. And, I've seen the positive impact that holding Bitcoin for 5 years has had on my life financially, as you can imagine. When I first started buying Bitcoin, it was $7,000 in April 2020. It costs $115,000 right now. It doesn't take a mathematician to see that was a very strong investment. Never sold any Bitcoin, just bought the whole time. Bought the top, bought the bottom, bought everything. And just going through that, for years, I just didn't understand how people on crypto Twitter would talk about being broke. I was like, what are you talking about? Like, I know that guy's been in crypto longer than me. How are you broke? I just didn't understand. But now I understand. It's because they're essentially treating it like a gamble and basically saying like that Bitcoin thing is bullshit. Like just treating the whole thing like they're on a DraftKings app.
Mm-hmm. Mm-hmm. Why is that? Why are people like that?
Because they don't understand what like Bitcoin is. And they I think a lot of people on CT think Bitcoin's like not going to go to $1 million. And it's like, I guess at some point going to have some gnarly reversal where it just goes to zero. I really don't know. I really don't know.
Yeah. I think it's also people are just gambling addicts.
Yeah.
I think inevitably, like I think it's really hard to log into crypto Twitter and all that kind of stuff and not be like enchanted by all these people that are like, even for things like alts, like, man, thank God I longed Hyperliquid a month ago. You know what I mean? Like that type of shit. It's really easy to be enchanted by that. Be like, I too can go and make a 2-3x today if I just play my cards right. And I think part of that is true, where it's like, that's what's kind of beautiful about crypto and also dangerous, is that it's like, there's a set of decisions you can make today that make you rich in a month. But the chances of you knowing what those are proactively are near impossible.
Yeah.
But
and
there's a chance.
There's a chance. There's a gambler mentality. And one thing to add that's just kind of come to mind to, further communicate an understanding of this is that I think a lot of people don't have jobs on crypto Twitter, and that's insanely important to them. They do not want to have a job, which I actually understand because I never wanted to have a day job either. I did go and have day jobs and make, 6 figures as an employee because I worked hard and like moved up the ranks and everything because that's what people are supposed to do. You're supposed to like make something of yourself, but there's a lot of people that just don't want to have a job. And when you're in that kind of like mental framework, you have to make income. And the way you're making income is from trading. And that puts you in a way different spot versus like if a guy's an attorney in New York and he's making like $250,000 a year, Right now, it's a race for all the attorneys and the people with good jobs, the people that work in tech in New York and all these places. It's just a race for those higher income individuals to figure out Bitcoin and build enough conviction in Bitcoin to plow all the money that they make into Bitcoin. And then the level of rich that they'll get is just insane. Like, you used to have to start a company to get that level of rich, but because of currency debasement and because of not having a sound money standard, you now, if you make enough money that you have excess money every paycheck and you're not, living paycheck to paycheck, all you have to do is plow your money into Bitcoin and you can get basically as rich as a guy that hits it big with a company.
What do you think of all these signals that we see sometimes where, it's like JP Morgan CEO says his target for Bitcoin by end of year is 400K. What are those? Are those, like, that seems a little unrealistic despite Bitcoin doing well, but it's like, are those something just like a bull signal? Like, what's the deal with that?
That's a great question. I think that's something that you'd be better suited to talk to somebody who is deeply entrenched in TradFi, a guy like Mike Alfred or someone similar, and they'll have a much more sound opinion than I will. I would assume that my opinion on this is probably off. I kind of don't know what to make of the weird variance in year-end predictions by institutional predictors when it comes to Bitcoin. Everything from 115K predictions, which is literally the price of Bitcoin today, to like 400K predictions. I really don't know where they come up with that stuff. Having said that, they're wrong about a lot of stuff. I mean, Scott Bessent, Treasury Secretary, said he made his career counter trading or trading against Goldman Sachs. And Goldman Sachs is one of the biggest names in finance. So at the end of the day, institutions are wrong. They're just more right than the average person, and the currency is being debased. So holding assets is just going to, make you rich anyway, as long as you don't buy literally the worst stuff over and over and over again. If you just kind of get it right a little bit, you're going to have more money than someone that didn't buy assets.
If you were starting right now, what would you do? If you were starting right now, you're one of those attorneys in New York.
Yeah.
You're like, okay, I've got X amount of money. I'm ready to plow it into this. What would you do?
I mean, I would just buy Bitcoin if I was one of those attorneys, because they make a lot of money. And so they can actually just not even think about it and just buy Bitcoin. If I was someone making like 60 to 80 grand a year or something, like a sort of average income for someone that's between like 22 and 26, depending on where you live, obviously. But I've lived in cities like New York and LA, so that's what those people make. I would still focus on Bitcoin. Excuse me. But if I wanted to give a swing to outperforming it, I'd accumulate assets like Metaplanet, which is a Bitcoin treasury company, but a high quality one. It's kind of the number 2 Bitcoin treasury company, in my opinion, in MicroStrategy. And I would accumulate shares of Metaplanet and be ready for the volatility. The problem with Metaplanet is you have to pay a $50 fee every time you buy it because it's a foreign stock. It's a Japanese stock. So you have to pay a $50 foreign transaction fee no matter what brokerage you buy it on. I think someone could fact check me on that, but on Schwab, where I buy it, you have to pay that fee. On Fidelity, if you buy it there, you'd have to pay that fee. But that's a good one. I think that gives you a shot at outperforming Bitcoin. I think, an asset like Dogecoin, maybe a quality meme coin like Pengu, I think that you can try to outperform Bitcoin with those. You have to sell those. It's still going to be really hard to outperform Bitcoin. What you're doing is you're trying to build up like your wealth in general. You're trying to build up like a mound of wealth that eventually should be like a Bitcoin mound. The other thing you can do is you can find some of these volatility stocks, and you can accumulate, if they have a lower price tag, you can accumulate 100 shares of them, and you can try selling options, because when you sell options, as long as you didn't pick an absolute stinker stock that just goes down and doesn't come up again, no matter what, you make money. You might leave some upside on the table, but it's a decent way for you to start building a little bit of momentum for income. I was doing that with Open Door Technologies at first, but then when I realized it was like a runaway freight train, I stopped doing it because it's actually just better to hold the stock if it's going to be a runaway freight train. But with a stock like MicroStrategy, that unfortunately has a high barrier to entry for options trading because it's like a $330 stock. So to accumulate 100 shares, you're going to have to spend $33,000, which the average person doesn't have. However, the average person can probably accumulate that over a couple of years and then be in the game, or they can accumulate MicroStrategy in the meantime and expect another stock split, because you can't expect that. He's already done one. So if you study the last one and look at the price it was at and the price it went to, you can kind of do some backwards math. He will do another stock split. It's just going to happen over and over again. That's what he does. He does the same thing over and over again. Then you can put yourself in a position to trade options on it in the future. Because, for example, I have a lot of MicroStrategy. I have 1,900 shares of MicroStrategy. Selling options on that is quite lucrative even if you do very low risk options like a 5 delta or a 10 delta, it materializes to thousands of dollars, like $3,300 every 30 or 40 days, which is basically my entire rent. So things like that, but it takes time for you to build up to that point, and you can do it with lower priced stocks in the meantime. It's hard to find the right ones, but once you sort of like are in the game and you're learning about it, you can figure it out.
How do you know all this shit?
I mean,
How do you know all this? How do you know all this?
Just living through it, like experiencing it. Just like you could ask Stephen Curry, how do you know everything about basketball? I mean, not that I'm not comparing myself to Stephen Curry, by the way, but like, when people get into golf, they're like, how do you know all this stuff? It's like, just playing golf for a long time. People learn what club to use. People learn what like sort of like English to put on the ball when they strike it. It's just through practice and experience. And I've been fortunate that because I have a full-time, quote crypto company as my career, as my job at this point, I'm deeply entrenched in the markets, and I'm able to participate in the markets in a way that a doctor that works during market hours on his feet every day, Monday through Friday, can't do.
Yeah, that's a good point about actually being in the industry. Let's talk. We're almost out of time. Tell us a little bit more about BoDoggos.
Yeah, I mean, look, BoDoggos is an NFT collection on Solana, and it's a media company where we partner with crypto brands like Gemini, AVAX. We partner with Sui. We partner with, Exodus Wallet, a lot of like really big names that are established companies, publicly traded companies in many cases in crypto. So we're fortunate that we've been at it for so long right now that we get to work with these quality partners, kind of top of the food chain partners in many respects. And we do essentially influencer marketing content for them, which is quick creator content, as they call it, which is quickly becoming more and more relevant in crypto. So that's like sort of my day job, is running that business. The NFT collection BoDoggos is the NFT collection that our business has put out. We buy BoDoggos every single week with K9 Strategy, which is our BoDoggos treasury company in the company. I mean, that's like tongue in cheek, but it happens I bought 3 BoDoggos today with K9 Strategy. We take the profits from our company and we actually hold investments with our company. We take some of the profits from that stuff and buy BoDoggos with it. The investments are mostly Bitcoin based investments. And that's my business. Yeah. But I mean, I focus on markets a lot because the wealth that you can build focusing on markets actually in many cases trumps building a business. And I meet people here where I live in Miami, and so many people are interested in building businesses. So many people are interested in building personal brands. And the thing is, depending on your business, you could actually be really undermining your own wealth building ability, because if you're going to go and invest 25K in like a perfume business or something, which I've like talked to different people in Miami about doing, if you're going to spend Bitcoin to build a business, you're taking this humongous risk. And I'm not telling people to not chase their dreams. And, I was that guy forever, but I like businesses that you can build with really low friction, which is why I like content so much. And then with content, you also get your own distribution channel. So I think the landscape for building a business is different on a sound money standard like Bitcoin, a hard money standard, where you're really sacrificing this insanely valuable asset to take a swing at something. And I think people with jobs would be very surprised at how much wealth they can build just by focusing on Bitcoin.
Man, Bitcoin bull. I like it. This is a very different guest than what we've had on the show. Pio, at the end of the shows, we usually do like a bit of a hot seat,
sure,
quick fire. So I'm just going to throw it at you and just don't even think on these. Just give me the answer right away. Okay. Mm-hmm. Okay. Biggest risk that has paid off for you.
And buying NFTs. I made a lot of profits buying NFTs early-ish and holding them for longer than I should have, but it was still better to hold them than not.
Biggest risk that got wrecked.
Holding the NFTs for too long. The individual NFTs too long. Yeah.
Yeah. Best airdrop, if that applies to you.
There's been a couple, Akutars, Pengu, Bored Ape Yacht Club ecosystem.
Worst airdrop.
I mean, there's been airdrops that just don't amount to anything. So
is there any that comes to mind?
I don't remember the names. No, because I was never like an airdrop farmer, so I never like had this big expectation and then was disappointed.
What is a token we should all be buying? You can't say Bitcoin. Don't say Bitcoin.
A token everyone should buy that's not Bitcoin? Maybe probably either Solana or Dogecoin.
Token that's way overhyped.
maybe Hyperliquid. I mean, I could be wrong about that, but like it's getting all this hype, and I'm like, is it actually like that interesting? Yeah, yeah.
Who is your favorite influencer?
Crypto influencer?
Sure. Yeah.
Well, my favorite influencer period would be like Mike Alfred, but crypto influencer would be, I think Gainsey's funny and interesting.
Smartest person you know?
Probably the smartest person that I know, like in my life personally, is Nick, my business partner, Nick O'Neill. Choose Rich Nick.
Yeah, we got to get him on. Clemente said the same thing, so we got to get that guy on. Okay, last meal before you die.
Probably like a really incredible Italian pasta meal.
From where?
Homemade from some old lady.
Right on. Okay, great. Well, Pio, dude, thank you so much for coming on the show, sharing your insight. Bitcoin treasuries, Bitcoin mining stocks, open door. That's where this guy's mind is at. And we'll post all your social links down in the bio. Dude, thank you so much.
My pleasure, man. Thanks for having me on.
Want updates from the trenches alongside the tokens we're trading? Sub to our channel, then join the Milk Road Degen and Degen Pro newsletters. This show's for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.